Winston, thanks for joining us today. I'm so looking forward to your talk in Vancouver at the International Best Practices Forum. And what I'd like to do today is ask you a few questions related to some of the things you're going to speak to us about at the event, starting with how do you see technology shaping the future of public markets? And is it all about disintermediation, for example?
Sure. Yeah. No, I think the impact is profound. Typically, it starts with efficiency and processing, right? But more and more, people realize it's a new digital channel, as you talked about, disintermediation. But what's interesting is, when you look at the examples I put in my recent books on China's mobile internet economy, is that the disintermediation not only reduces costs, generates new consumer user traffic, but also creating new business models. So I can give you an example. In China, for lots of people, they never had a credit card. A lot of people don't have PC computers, and many of them do not even have proper banking accounts, right? How do you get to them, if you're an asset management company? Now, interestingly, as a large internet giants become the newest asset managers in China, because they have the super apps, which connects hundreds of millions of users, and like in the case of WeChat, it's got 1 billion users, right? So it become a new digital channel to get to the people, but it doesn't stop there. It creates new products. So, for example, there's one product called leftover treasures. Literally, that's the Chinese name. The idea is that people have money left over in their accounts with the super apps, right? Whether it's Alibaba or Tencent, because these super apps have, let's say, 100 or even more different apps. Let's say ride hailing, e-commerce, entertainment, contents consumption, you name it, right? So these accounts are linked to users' mobile wallets, and there's always something left over in the mobile wallets, right? Now, what's really interesting is the internet giants find a way to collect these numbers, these leftover money. In the case of Alibaba, in a short period of time, it gathered more than $200 billion for overnight money management, and that's sort of the largest money market fund in the world. Within a few months. If you think about it, it's even a better product than the money market fund in a bank, right? Because the users do not have to fill in paperwork, and they can have daily liquidity. They can move money in and out very quickly, and when the money pooled together, actually they can negotiate a much better rate with the bank. So when you look beyond the disintermediation, actually technologies are creating higher yield and better products for asset management users.
That's amazing. You've also written about China's digital war. What does that look like, and how might it shape the global economy moving forward?
Yeah, I use the title "The Digital War," obviously, to make the book more sensational, right? We're not literally in a war yet, but the competition of advanced technologies is real between China and the U.S. So for that, right, there are a lot of implications for global investors that are looking into Chinese tech sectors, which has generated many unicorns or even super unicorns last decade, such as Alibaba, Tencent, Xiaomi, or the more recent ones, right, the electric car companies and the AI companies, etc. So several very important implications very quickly. Number one, because of the tension between the U.S. China, the direction of innovation in China has changed, and that means for global investors, they will see new, different kind of unicorns to come, different from last decade. Last decade, Alibaba, Tencent, those companies were mostly e-commerce players on mobile internet, right? But now, because of the tech competition, China's government put more focus on quote unquote hard technology, like real tech innovation and advanced manufacturing. So in more recent years, we saw the emergence of Chinese electric car manufacturers got listed in the US, right? The top three are Xiaopeng, NIO, right, and Li Shang, Li Auto. They compete with Tesla, right? So we are seeing different kinds of unicorns to come to invest. That's one. And secondly, we will see the limitations on data flow between the countries, right? Especially in the AI, artificial intelligence area, because it is a data intensive sector, right? Because both US and China are putting a lot more restrictions on the data flow across the border, we will see fewer exchange of data flows, unfortunately, which will slow down the AI research, right? And in extreme cases, right, as we have seen in the case of SenseTime, a Chinese AI facial recognition company, was put on the blacklist by the US Defense Department, right? And as a result, its IPO could not have US investors' money. So it had its IPO last year at the Hong Kong Stock Exchange without US investors' participation. Right? So the data regulations, from the both countries, do have impact on the growth of these countries, these new economy companies. Right? And finally, I think the result of the digital war simply is that we will see fewer truly global companies. Yeah. So quick question: how many companies globally do you think are there to have more than 100 million internet users in both China and the US? I want our audience to think for a second. How many, and where are they? Right. So of course I give you the answer very quickly. There are only two globally. There are only two. And interestingly, one from China, one from the US. From the US, it's Apple. From China, it's TikTok, right? Which is a parent to ByteDance. Yeah? And these are the only two companies that have more than 100 million users in both countries, right? And even only two, right? We see, Apple, have to really deal with China data regulations very carefully. And for TikTok in the US, right, it is under analyst investigation, for its management of US users' data, right? So going forward, it will be just very difficult to see new, truly global companies to emerge because of the digital war.
Wow, that's a very powerful statement. I guess as part of that, the US has delisted Chinese firms most recently. Like,
right.
How big a blow is that to China, and how do you see this situation evolving?
Yeah, it's a very big topic. A few companies have already been delisted because they, such as China Telecom, for example, right? Earlier this year, it was put on the blacklist by the Defense Department, so it can no longer be traded in the US, and it is removed from some of the major stock indexes by the asset management product providers. But the bigger picture, is about roughly 200 Chinese ADR companies that are listed in the US, including Alibaba, and also the the new electric car manufacturers like a Xiaopeng, etc. Right? So for these companies, they are subject to the delisting risk because of a series of U.S. legislation and rulemaking. It started with the Congress. It passed a law 2 years ago called Hold Foreign Companies Accountable Act. Essentially, foreign companies must comply with U.S. listing rules to be listed. Right. Now the background here is that among all the countries in the world, only 2 places, companies from 2 places can be exempted from the U.S. auditing requirement. They are China and Hong Kong. They're China and Hong Kong. And this exemption was made possible through a memorandum between U.S.-China governments more than a decade ago. So the Congress law essentially said, forget about the exemption, all companies must comply with U.S. auditing requirements, right? And based on that, a year ago, U.S. SEC has developed detailed enforcement rules so that if a company from China, fails to comply with the auditing requirement from the U.S. For 3 years, then it will be forced to delist, right? And the enforcement agency for this one, so the third level is the PCAOB, right? The accounting board, which does the accounting of the numbers, for foreign companies to list in the U.S. So long story short, this enforcement is happening, number one. And number two, it looks fairly clear that the U.S. side doesn't want to change too much. So it has become mostly a compliance question from the China side, right? Now, the trickiest thing here is the Chinese companies are caught in between. The U.S. side demand more disclosure, more transparency. And from the China side, since we're living in the era of a digital war, data becomes very sensitive, right? So from the China's regulatory perspective, especially through the newly enacted data security law, right, limits Chinese companies' disclosure of sensitive data to foreign countries, right? So it becomes a very difficult compliance issue for the Chinese companies. And thirdly, we're looking at a SEC that's enforcing disclosure in multiple aspects. Not only from the auditing perspective, but also demanding Chinese companies to provide more disclosure on government influence on them, and cash flows related to the VIE structure, which made the listing possible. So when you look at all these, right, it is a very tough situation, for the Chinese companies because the U.S. side is for real, and the China side also has data security regulation, and the clock's ticking. So we will see how the two governments' conversation will evolve in the coming months to decide the fate of the $1 trillion-ish market capitalization of the Chinese companies listed in the U.S.
The clock is ticking. Those are ominous words. Thank you so much, Winston. And I wonder where we'll be in October. I look forward to hearing more in Vancouver when we see you on October 13th. Thank you so much for your comments and for joining us today.
Thank you, Caroline.
Yeah.